So I think we've seen increasing optimism and bullishness. If you look at our investor movement index, which is basically what people actually do, they've been getting increasingly bullish here for the last 9 months, and we publish that on a monthly basis. So they've been getting increasingly bullish in their positions, what they actually do. I think you also look at sentiment. Last year, the S&P 500 was up 14, 15%. So far this year, it's up, I think, 15 or 16%. And so I think you're seeing the markets at records high. It's starting to impact the psyche here, and that the economy is starting to get its legs. And I do think it is. The private sector part of the economy is doing pretty well.
But at the same time, some of your retail investors are holding about 20% in cash still. So how do you explain that?
That's not unusual for us. Our cash continues to be in that 15 to 20% range of our overall book, and our retail side will be slightly higher. And so that's very normal for us. And when it moves around, it tends to be more about the denominator, the market moving, as opposed to how much they're keeping in cash.
Now, one worry, as you know, is what's going to happen with interest rates. They're already rising. What does the Fed do next? You guys are doing a lot to try to warn clients or educate them. Tell me a little bit about those efforts, how you decided, listen, we've got to get a message out there on what you're doing.
And so what we did is, I think the biggest risk that we're worried about today is people that are in fixed income, to make sure they understand what happens to fixed income products when interest rates do turn, because I think there could be some surprises. And so as opposed to waiting that to happen, we stepped into it earlier this year in January and went to anybody that's holding a bond, an ETF, a bond ETF, or a bond mutual fund, and sent them some educational pieces from outside parties on make sure that they understand that when interest rates start to rise, they understand the impact on the mark-to-market accounting on their principal in their bond fund or their bond. And so that we've done that as a service to our clients to make sure that they're aware of what risk they've got. Good news is a lot of them are actually in the shorter bond funds and medium-term bond funds versus long.